Welcome to Woods of Stardon. This is CH. I will be covering the iShares Global Aggregate 1 to 5 Year Bond Index Fund in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. This video is done as a follow-up request from a viewer's comment in my previous video covering the Amundi Index MSCI Emerging Markets Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos and I'll be happy to work on it as long as I can find enough information on the product. iShares has its roots from an indexing team in Wells Fargo, but probably grew after the team was sold to Barclays under the Barclays Global Investors business segment. Barclays Global Investors decided to aggressively grow the ETF business in the year 2000 and officially branded the products as iShares. iShares gained quick popularity from its original suite of equity ETFs tracking the MSCI International Stock Market Indices, as well as being market leaders to launch ETF products covering bond markets and thematic investments such as sustainability and ESG. In 2009, BlackRock bought over the entire Barclays Global Investors business segment, including iShares from Barclays. BlackRock continued to expand the iShares business in alignment with increasing investor demands in ETFs and indexing mutual funds in the past decade. Today, the iShares business has grown into a gigantic market leader in the ETFs and passive index fund space, managing over $5 trillion of AUM through more than 1,600 ETFs offered globally. The iShares Global Aggregate 1 to 5 Year Bond Index Fund provides within its fund name some clear indication of its structure. The index fund means this is a passive indexing solution in a mutual fund structure instead of ETF structure. The IE at the end of the fund name means that this is an Irish domiciled product and is used to differentiate it from the products domiciled in Luxembourg and other European regions. As per the prospectus, the fund is a sub-fund under the BlackRock Fixed Income Dublin Funds plc fund family. I suppose the fund is branded under iShares instead of BlackRock because it is a passive indexing fund. The fund family is set up as an Irish umbrella investment company with variable capital or ICVC structure and is UCITS qualified. The fund is registered as a MAS recognized scheme, which means it is suitable for retail investors. The iShares Global Aggregate 1 to 5 Year Bond Index Fund lists Christian Hawking and a team name under the Portfolio Managers section in the fund webpage. However, I can't find Christian's bios or any information on what the team does. I get that this is a passive investment solution, so it is less important to know the people behind the product, but it would be nice to at least have a brief description of the team and a short bio of the name manager. The iShares Global Aggregate 1 to 5 Year Bond Index Fund provides a short investment approach in the fund webpage and fact sheet, summarizing the investment strategy of the fund. This is a passive fund that tracks and replicates the returns of the Bloomberg Global Aggregate 1 to 5 Year Index. While it is not clearly stated, the fund appears to be using an optimized replication or sampling replication approach that basically tries to invest in most but not all of the positions in the index while achieving a similar return. A full replication approach is more difficult to achieve with bond exposures because some of the positions, especially corporate bonds, may have liquidity constraints due to small size issued or lack of trading liquidity at times, and therefore difficult for the product to invest in the same allocations as the index. The prospectus provides more details and it is clearly stated the fund uses an optimized replication approach as the fund is allowed to invest in other positions not covered by the index to achieve a similar return in a cost-efficient manner. These positions can potentially be other funds or ETFs as well. The prospectus also provides a brief description of the index, although we will go through it in a while. Base currency of the fund is US dollars, which is typical of global bond products as US denominated bonds is the largest component in the market. The iShares Global Aggregate 1 to 5 year Bond Index Fund, as the name implies, tracks the Bloomberg Global Aggregate 1 to 5 year index. This index is actually a subset of the broader Bloomberg Global Aggregate Index, with the additional requirement of having the bond maturities between 1 and 5 years specifically. This is actually not a commonly used index for passive tracking solutions, as most of the short maturity or short duration bond products are either focusing on just US markets or just corporate bond markets. As such, I haven't really found another passive fund or ETF that tracks this index. The Bloomberg Global Aggregate Index, on the other hand, is probably the most popular global bond index used in the financial market. It consists of investment-grade debt of at least 1 year of maturity from 27 local currency developed and emerging markets globally, and covers treasury, government-related, corporate, and securitized fixed-rate bonds. Given the nature of the global bond markets, treasury by sector and US dollars by currency are the largest exposures in the index. There are many funds and ETFs tracking this broader index, or using this index as a performance benchmark. Now, one question I have, and probably many investors have, is why is this iShares product created in a mutual fund structure instead of ETF structure? Now, BlackRock does run a variety of investment products under the iShares branding. While passive ETFs are the most popular in the list, iShares does have passive index funds such as this one, as well as active ETFs that I have also covered a few previously. A possible reason might be that the index is less commonly used in the market, and as such, if it was created as an ETF, there might not be enough trading activity to make the ETF liquid enough. Another possible reason might be that it is easier to create different share classes to cater for different investor categories or different trading currency demands via a mutual fund structure compared to ETF structure. Also possible is that the product was created based on specific requirements from an initial cornerstone investor that wanted it to be a mutual fund instead of ETF. Regardless of the reasons, having the product in a mutual fund or ETF structure should not have a significant impact to the average investor. The iShares Global Aggregate 1 to 5 year Bond Index Fund was incepted at end 2017 and currently has over $1.5 billion of AUM, which is a decently large size for a passive index fund that tracks a less commonly used index. I will go through the portfolio details in comparison with the broader Global Aggregate Index using the data from iShares Core Global Aggregate Bond UCITS ETF. Here, we can see the 1 to 5 year maturity bonds comprise of about 43% of the broader index. So the fund actually covers a pretty large universe of bonds. The bond maturities are quite evenly spread across the years, and the deviation in allocations versus the index are not too big, considering the fund runs an optimized replication approach. On geography breakdown, we can see that the fund actually has a pretty similar country exposure compared to the broader index. So investors are getting similar country risks even with a focus on shorter maturity exposure. Here are the sector breakdown data. I have no idea why iShares have different sector classifications between the two products, and it makes comparison a bit troublesome. In a general sense, both the shorter maturity and broad indices show that treasuries and government-related bonds dominate both indices, with corporate bonds at roughly only 20% exposure. Investors who prefer to focus more on corporate bonds for higher potential returns may therefore find these indices and these products not so suitable. As these are investment-grade indices, Credit rating breakdown is unsurprisingly with the largest exposures in AA and single A ratings, given these are where most of the global sovereign bonds in the portfolios fall under. Again, we do not see too much differences between the shorter maturity version versus a broader version. Investors who would like some high yield exposures would have to either find other more suitable products or have to additionally add on a high yield specific product to complement these solutions. The fund has over 3,700 holdings, which sounds massive, but is actually common for bond portfolios, as each bond has a fixed issue size and therefore bond funds need to add more and more bonds as the fund AUM grows. The fund provides top 10 holdings, although it is not really useful, given top 10 in the fund is a very small representation of the portfolio. Interestingly, iShares provides downloadable full holdings list for passive ETFs, so I wonder why the same is not available for passive index funds like this one. The fund also provides some bond-related statistics for its portfolio. Given this is a passive solution tracking a 1 to 5 year maturity index, the weighted average maturity and effective duration expectedly would be around 2.5 to 3. Yield to maturity is slightly over 3%, which is considered low as this is a US dollar-based currency solution and US 3-month SOFR is currently slightly above 4%. Although the iShares Global Aggregate 1 to 5 year bond index fund is created in a mutual fund structure, its share classes and fee terms are very confusing and different from how typical mutual funds work. The more commonly used retail share class is D, that comes in base US dollar class and various other currency classes, including Sing dollars. While typical bond mutual funds fully hedge their underlying portfolio to the base currency, this fund actually was incepted with a US dollars unhedged class in 2017, and then launched a US dollar hedged class a few months later. The Sing dollar classes also comes in both currency unhedged and hedged versions. Distribution classes are also not consistently available across currencies, even though this is a bond fund and investors typically expect bond funds to offer distributions. In this case, there are distribution classes for US dollars but not for Sing dollars. Management fees and total expense ratio or TER are also not consistent. Some of the D classes have a 0.12% management fees, while others have 0.14%. The resulting TER are also different, ranging from 0.15% to 0.17%. At a glance, it seems that the currency hedged share classes have slightly higher TER than the unhedged classes. The fund does have institutional share classes. However, they surprisingly have higher management fees and TER than the D share classes, which doesn't make sense. In any case, investors should just ignore them and go with the D share classes. The fund currently does not expect to pay any trailer fees to distributors and also sets a 0% subscription fee. While the TER of the fund looks very low compared to typical bond mutual funds, it is still slightly higher compared to some of the bond ETFs in the market. For example, using other similar products from iShares, we can see that AGGG has only 0.1% TER, while ISTB has an even lower 0.06% TER. While the iShares Global Aggregate 1 to 5 year bond index fund provides distribution history data in the fund webpage, I am grabbing the data from Morningstar here as it is easier to refer. The US dollar distribution share classes both have a payout yield of around 2.37% per annum currently. From the distribution history, we can see that the distribution frequency is semi-annual. It also appears that there is no smoothened payout policy, as the payout amounts fluctuate quite substantially over time. Given the payout yield is lower than the portfolio yield to maturity, it suggests that the fund is paying out the coupon yields of the underlying portfolio. Given the low payout yield and the inconsistent payout amounts, this may not be a suitable product for investors looking for stable income generation. As the fund strategy is not expected to generate high returns, the distributions do take up a sizable portion of the total returns of the fund. Here is a Morningstar chart showing the NAV versus total return of the US dollar hedge share class since incepting in 2018, where we can see most of the returns over time have been paid out as distributions. BlackRock generally provides pretty comprehensive performance data for its products, and the same goes with the iShares Global Aggregate 1 to 5 year bond index fund, as seen from these tables extracted from the fund webpage. This is the US dollar unhedged class, and we can see its performance is tracking the benchmark index quite closely, with the differences easily attributable to the 0.15% TER. This means that the benchmark index is also currency unhedged, with a US dollar reporting currency, and the share class is tracking it quite faithfully. One thing to note is that volatility and drawdown can still be quite significant even for a low maturity portfolio, as seen with the minus 9.4% for calendar year 2022. The US dollar hedge class, on the other hand, gives a rather different performance experience, with some time periods better and some worse versus the benchmark index. Overall volatility seems to be lower though, but let's compare them on a chart. Here is the Morningstar chart comparing the US dollar unhedged class versus the US dollar hedged class since 2018. It is very clear that while the US dollar unhedged class tracks the benchmark index accurately, it comes with a much higher volatility, resulting in a weaker performance in the long run, as US dollars has been a strong currency in the past decade. Therefore, the US dollar unhedged class would work better for investors looking to track the benchmark index more accurately, and as well have a view on FX directions, in particular the strength or weakness of US dollars. Personally for me, I would prefer the US dollar hedge class instead, as I would want to minimize FX risk as an uncertain factor in my investments. Sing dollar classes are a bit more complicated. Here are the Sing dollar unhedged and hedged classes compared to the US dollar equivalents since the inception of the Sing dollar classes in 2022. Here, we can see that the Sing dollar unhedged class also comes with more volatility, but the performance line has a different movement because here we are adding another layer of FX complexity of Sing dollar strength versus multiple currency exposures in the portfolio. The Sing dollar hedge class, on the other hand, has a lower volatility and basically follows the US dollar hedge class performance, but it does come with currency hedging costs that has been quite substantial in recent years, and therefore the performance line looks to move away from the US dollar hedge class quite a lot over time. Is one better than the other? Again, this is more on individual investors' preferences, and I again would prefer the currency hedge class if I have to choose between the two, but I would pay close attention to the hedging costs as it is eating up quite a lot of the returns. I briefly mentioned about AGGG and ISTB ETFs from iShares earlier, so let's take a look at their performances as well. Here, we can see that AGGG has a larger performance volatility on both up and downside, as it has no maturity constraints, and is therefore more subjected to impacts from interest rate risk. The fund therefore provides a solution for investors who like the Bloomberg Global Aggregate Index but want to reduce interest rate risk with a lower maturity portfolio. ISTB, on the other hand, tracks a different index called Bloomberg US Universal 1 to 5 year Index. The index has slightly more corporate bonds, including almost 10% in high yield bonds, so the resulting performance looks to be slightly higher than the US dollar hedge class of the fund. However, ISTB is a US listed ETF, and there doesn't seem to be an equivalent solution in Europe, so this fund is probably the nearest match. How does the fund compare against the popular active global bond funds in the market? Given active bond funds adjust their portfolios on a daily basis, they can bring about higher return potential as well as higher risk compared to a passive index tracking fund like this one. On a relative basis, we can see that the US dollar hedge class of the fund is definitely having a much lower volatility and drawdown compared to the various popular bond funds in this chart. So even with a lower long-term return expectation, this fund may still be suitable for investors who are focusing more on volatility considerations. It is a different story for Sing dollar investors. As mentioned earlier, the currency hedging costs for the Sing dollar hedge classes have been quite significant in recent years, so the returns of Sing dollar hedge class of global bond strategies have been suboptimal. Here, we compare the fund versus popular short maturity Sing dollar focused bond funds in the market, and we can see that the iShares fund underperforms the rest quite visibly. Therefore, it is currently not appealing from returns perspective for Sing dollar investors to consider this fund. With that, let's summarize our findings. iShares is well known to be the ETF market leader and is part of BlackRock, the world's largest asset management firm. There is no doubt in the resources available for iShares to continue innovate to create new investment product ideas and improve existing ones. There is hardly any information available on the fund manager and the investment team. While this is a passive solution and therefore not reliant on active management, providing some information on the investment team can help investors understand where this product falls under within the enormous BlackRock organization structure. The iShares Global Aggregate 1 to 5 year Bond Index Fund is a passive indexing fund tracking the Bloomberg Global Aggregate 1 to 5 year Bond Index. The fund uses an optimized replication approach and has been able to track the index closely over the years with minimal tracking error. The index is a subset of the broader Bloomberg Global Aggregate Index. While iShares is best known for its passive ETF solutions, it does have quite a lot of products under passive indexing fund and active ETF offerings. Running this fund in a mutual fund structure provides convenience in creating share classes to cater for different investors' needs and also avoids intraday trading liquidity concerns, given this is a lesser used index by investors. That being said, the fund currently has a decently long list of share classes, but they are somewhat confusing to understand. The retail share classes do not have a standardized management fee, and the institutional classes surprisingly have higher fees than retail classes. Distribution options are not available for most currency classes, which is uncommon for bond funds. Currency hedging can and will have significant impact on performance, so it is important for investors to figure out what specific share classes they should be looking for. As a result, the performances across share classes can vary significantly. For example, the US dollar unhedged class tracks the benchmark index closely, but it has a much higher volatility and worse long-term return compared to the US dollar hedged class. So investors need to carefully think about what kind of performance experience they want to obtain across the different share classes. Consequently, the US dollar hedge class has lower long-term returns compared to popular global bond funds, but also has much lower volatility. So investors focusing on reducing volatility can still potentially consider this fund. Sing dollar classes are, however, unattractive, as the high currency hedging cost drags down the returns for the Sing dollar hedge class, and the FX movements have not been beneficial for the Sing dollar unhedged class. Investors are better off going for Sing dollar focused short maturity bond funds instead. In conclusion, the fund is potentially interesting for US dollar investors looking for low volatility solutions in the short maturity global bond space. Investors need to be careful to invest in the appropriate share class depending on their own requirements. This concludes my absolutely biased comments on the iShares Global Aggregate 1 to 5 year Bond Index Fund, and I hope it will help in your investment journey. May we all grow wiser and prosper.